Guys, this is S&P 500 Technical Analysis for the week of February 21st, 2023. That is from February 21st Tuesday to February 24th Friday. This S&P 500 Technical Analysis will tell you what is expected to happen in the S&P 500, and not just in the S&P 500 but also in the Dow Jones and the Nasdaq and in the overall US stock market. So guys, last week I told you that do not fall into the trap, in this the bullish trap. And why this was called as the bullish trap? It was the bullish trap because within 5 days the Fed chairman changed his tone from positive to negative, and he was concerned about this the 3x NFP data, because 3 times NFP data is an early indicator that the inflation is either going to hold or is going to give a bullish reversal. And exactly the same has happened on Tuesday. This is the same thing that we have seen through the CPI data. And this the CPI data expected hold or a bullish reversal, I have very well explained in my this the previous S&P 500 technical analysis. Anyways, let's see how the S&P 500 has reacted to the data and how it has moved in this the previous week. So if you notice that it was the day, it was Tuesday. On Tuesday, CPI data was published, and I've told my YouTube community members one day before this the CPI data it was out, that these are the possible scenarios, and this is how the S&P 500, the Dow Jones and the Nasdaq and the entire stock market, not just the US stock market but the global stock markets, are expected to react. So these were the 3 scenarios: CPI data less than 6.5, CPI data equals to or in a range of 6.35 to 6.5, and then CPI data is more than 6.5. And this is how the entire stock market is going to react and is going to behave. So on Tuesday, the CPI data was out, and then it was confirmed. It was like 99% confirmed that now there is no bullish future. And this was the same thing that I've informed to my YouTube community members, that now there is no bullish future, no short-term bullish future, no long-term bullish future. We are done. And if you see that there is any bullish reversal, then go and short. Just short. Use every retrace as an opportunity to go bearish. And now you can clearly see that they have shorted here, then there was a fall and fall and then fall. So they have made money here, here and here. Anyways, a lot has changed in the previous week, and now we can clearly see, okay, the change in the technical indicators, the change in the sentiments, further data. Okay, what data? This the NABH data, okay, the retail sales data, and some other data, okay, that we are going to talk about in this the S&P 500 technical analysis. And we are also going to talk about the Dow Jones, and you can clearly see that the Dow Jones is consolidating. Then we will talk about the Nasdaq. Nasdaq means Q. Now guys, before I proceed further, let's discuss the agenda of this S&P 500 technical analysis. So guys, one more thing, that if you have not yet subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And guys, other than that, if you're looking for the daily updates of the S&P 500 from Monday through Friday, each and everything, then you can click on the join button in order to join my YouTube community. So guys, the first point of the agenda will be SP500 technical analysis on the weekly chart. So once again, weekly chart means the hawk eye view, the broad picture, the big picture, what is going to happen in the next few weeks, in the next few months, etc. And now surprisingly, something has happened, something very, very critical has happened in the S&P 500. And this is going to, or this has the potential to change the picture of the entire stock market. Okay, so this will be the part of the weekly chart. So I will tell you that how just by $1, that everything is expected to change. Then guys, we will talk about the second point of the agenda, that is the SP500 support and resistance levels. I will give you the support, and for example, last week I mentioned this thing that we have 4150 and 60, 4150 to 60. This is a very, very heavy resistance zone. Now, any movement will be confined, will be restricted to this, the 4150, 4160. First, the S&P 500 has to struggle before it can actually breach this, the resistance, and it can move up. Secondly, anything beyond 415060 means that we have a very strong resistance at 4185. So as of now, anything beyond 415060 is not possible. If the market manipulators, if they push the S&P 500 further up, then we have 4185. So technically, this is the zone that is going to hold the upward movement of the S&P 500 in case if the data is not favorable to the, means the economic data is not favorable to the SP 500, right? Secondly, I mentioned this thing that whenever it comes down, then we have 4100/4110. Okay, so this is a very strong support. Below this, the strong support, then we have 4065. Okay, and then we have the zone of 4035. So these were the support and resistance levels, right? So similarly, okay, so in this, the S&P 500 technical analysis, I will give you the support and resistance levels for the next week. Okay, and this time will be more bearish, okay, than this, the bullish. Okay, because as of now there is nothing to be called as bullish, right? So we'll be more bullish. Yes, there is a chance. There is an exception. An exception is the consolidation. Okay, either bearish or consolidation, but no bullish. This is the short picture for the entire US stock market. Okay, no bullish, but either consolidation or bearish. Consolidation, for those who are not aware about the consolidation, this consolidation means an oscillation between two levels, up, down, right? Anyways, then comes the third point of the agenda of this SP 500 technical analysis. Now, this the third point is the CPI data. We are going to analyze the CPI data. CPI means the inflation, right? So last week I have mentioned in my the S&P 500 technical analysis that technicals are saying that either the CPI is going to hold, means the inflation is going to hold, or there will be a bullish reversal. Okay, but the chances of seeing that the CPI is further coming down, these are very less, right? And this was all through the technicals. If for some reason, if you have missed that part, then you can watch the previous S&P 500 technical analysis where I have discussed this thing. Okay, that technically either it will hold the inflation, either it will hold, or there will be a bullish reversal. Okay, and it was okay, as was expected and predicted. Anyways, so but here, okay, now that the data has been published, okay, that the data is out, so now we are going to analyze the CPI data and its impact on the entire stock market in the coming days, weeks, and months. Okay. Then the fourth point of the agenda is the SP500 technical analysis on the daily chart. See, this was the weekly chart, and something very important has happened on the weekly chart. Okay, just $1. This thing that I'm going to discuss. Okay, but the weekly chart means the big picture, the broad picture. Okay, the daily chart. So the daily chart means that what is going to happen, or what is happening from Monday through Friday. Okay, what is happening on the day-to-day basis, how the technicals are changing. Recently, we have noticed that the stochastic RSI, it came down, then it moved up, and finally, okay, it came down, and now it is bearish. Now it is bearish and is supporting the MACD. MACD is already bearish. Okay, so we will talk about these, the technicals, all of the technicals. And now, so last week, okay, it was more like bullish, but this time, okay, it is not. So this will be the part of the daily chart. Okay, we will see that what is going to happen. Okay, most likely in this, the next week and the next to next week. Okay, technically. Then finally, okay, this is the fifth point of the agenda of this S&P 500 technical analysis, and this is the most important part. Okay, and this is the SP 500 probable movement from February 21st, that is Tuesday, to February 24th, that is Friday. Remember, Monday is the holiday in the US. And this information is for those who are not based out of US but are trading in the US stock market. Okay. Anyways, so in this, the probable movement, I will tell you that exactly what we can expect from the S&P 500, Dow Jones, and the Nasdaq, that how they are going to behave and how they are going to trade. When we can expect a bounce, when we can expect a bearish reversal or a bullish reversal, whether the consolidation, whether this, whether that, etc. Okay, so this way you will be able to plan your trades for the next week. And guys, there is one more very important information that I would like to share, that now I have introduced some changes to my YouTube membership. Now I have added two additional levels. That is, one is the daily S&P 500 updates, that is from Monday through Friday, and the second one is the updates and opportunities, means all updates from Monday through Friday plus the opportunities. That is, the all midweek updates will be discontinued from March 1st. So I will discuss about this change, okay, and each and everything and how it is going to work, okay. So first let us cover, okay, some of this, the technical part, and then I will discuss, okay, this thing in detail. Now guys, another thing, okay, that I would like to mention here, that this S&P 500 technical analysis is not a financial advice of any kind, in any form or in any manner. Secondly, this S&P 500 technical analysis is not about the trade setups, because I do not know that how we are going to interpret my S&P 500 technical analysis. Although I try my level best to clear each and everything to make sure that you understand what I am trying to say. So guys, now I am going to begin with the first point of the agenda, which is the SP500 technical analysis on the weekly chart. Now guys, we are here and this is the weekly chart of the S&P 500. Let me write it down. W as in weekly. Weekly means that one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now something very important has happened here in this the weekly chart of the S&P 500. Okay. Now what you are going to notice is that the closing of this the weekly candle, remember, one candle means 1 week. The closing of this the weekly candle is at 4079.10, right? Now if you notice that the boundary of the Ichimoku, was at 4080.25, right? So how much is the difference between the 4080 and 4079? Just $1. Just $1, right? See, stock market is all about, okay, it's all about the information and the numbers. Okay, so it's just the numbers game, and even a few cents can change the entire picture, right? So 4080.25, it was the boundary, means the very or the extremely heavy support for this the S&P 500, right? But it closed at 4079. So I've discussed this many times. Okay, this is a manipulation technique that okay, we call it as mark the close. Okay, mark the close. So what happened is that the market movers or the market manipulators, they willingly close a particular stock or an index or a commodity or anything, okay, to a level which then further signifies what we can expect from the stock market. Now when we look into this the picture, okay, there was just a $1 difference, and what do you think that they do not have enough money to close the SP500 inside the Ichimoku cloud so that it can be saved? No, they have a lot of money. So what they did is that they willingly, I repeat, they willingly closed it just, okay, they just by $1, okay. Now this was the same thing I mentioned yesterday in my final update. So I give this the final update 1 hour before the closing of the stock market, okay. So in my this is the final update to my YouTube community members. I mentioned this was the second point, okay. Second point was the closing of the SP500 below 4080. Okay, number was 4080, means that the stock market has given up. Means, see, it's not just about the SP500 but for the entire stock market, and is going bearish, highly likely, and that the chances of seeing further bullish movement in the stock market remains thin, okay, or very like low, okay. You can also expect a downward movement irrespective of any open on Tuesday. That will be the first open, okay, that will be the first working day of this the next week, or even a gap down open in this case, right? Now you will be surprised to know that how this the $1, okay, this just the difference of $1 is going to create, okay, this kind of situation in the entire stock market, okay. So let me answer your question here. Now in order to answer your question, we need to look into this the past. So in the past, what has happened is that, okay, these were the two scenarios. Number one, And number two, in this the number one scenario, what has happened is that there was a candle, a weekly candle. It has closed, and this the difference. Okay, this the difference in this the closing. Okay, it was like $7, approximately $7 only. And that what happened in the next week? The open was the high, and then a downward movement, heavy downward movement, right? Because see, we are talking about the weekly chart. Okay, weekly chart means the big picture, and on the weekly chart, one candle is enough. So we have seen that because of this, the just okay, a $7 difference. Okay, this in the closing, we have seen okay a heavy fall. Okay, because this was now it has cleared that now the S&P 500 has come and closed in the bearish side of the Ichimoku cloud. Okay, and remember last week and for last many weeks and months, what I mentioned in my S&P 500 technical analysis is that we are in the long-term bear trend, long-term bear trend, long-term bear. Okay, so recently you have seen this the upward movement. What was that? This was the short-term bullish trend, right? This was a short-term bullish trend, but this is all the long-term bear trend, a short-term bullish trend in the long-term bear trend. This is now the second scenario. The second scenario is there was a bullish candle. It closed inside the Ichimoku cloud. What is this? The cloud. Cloud is an illusion that you cannot trust. As long as the movement of any stock, any commodity, any index is inside the Ichimoku cloud, it cannot be trusted. You cannot say that because it is closed in the inside the cloud and it is and it looks bullish, this means that it will go bullish. No, not exactly. Okay, because this is what this the cloud is known for, illusion. Now because this weekly candle, this weekly bullish candle has closed inside the Ichimoku cloud, that was the reason that this the upward movement, it was not certain because it closed inside, not outside. Remember, it closed inside, not outside. Okay. However, when this candle was formed, and if you watch my that SP500 technical analysis that the last year, okay, I have clearly mentioned that now we are going to see a heavy fall in the entire stock market, not just in the S&P 500, but in the entire stock market, and it was there. Okay, because here it has cleared its intention that it is not expected to move up, that it want to remain bearish. Again, here it has cleared its intention that no, it doesn't have that much potential or the reasons to move up. It gave up. Okay, it gave up. And then now this is the third time we are seeing here. But this was a beautiful bullish trap. Very, very beautiful. Okay, because they closed, the market manipulators, they closed it by just by $1. So guys, now we have seen, okay, this is the movement and the closing, this is the $1, okay, this thing. Now let's do the technical analysis. Let's see what the technicals are saying. Okay, so the technically, first the Bollinger Band, this is the upper band of the Bollinger Band, this is the median of the Bollinger Band. Because the S&P 500 has closed in between the upper band of the Bollinger Band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands. Okay, then comes the moving averages, clear fan out, crossover, closing above the moving averages means the EMA. EMA means the exponential moving average. Okay, this means that the S&P 500 is clearly bullish through the EMA, the moving averages. Okay, then comes the Ichimoku cloud. Finally, it has closed just below the Ichimoku cloud only by this the $1, only by $1. So finally, we will say now the S&P 500 is back into its long-term bear trend and is bearish through the Ichimoku cloud. Okay. Then comes the next, these other technical indicators, MACD. MACD is more than the signal. However, MACD is positive and the signal is negative. This means that even though we have seen that the MACD is more than the signal, means it is directionally it is bullish, but because the signal is still negative, this means that it failed to gain its long-term bullish trend. Okay, So long-term bullish trend or long-term bearish trend, okay, it is not that easy to identify. These are multiple, okay, these are conditions that apply to that, okay. But as of now, MACD is directionally bullish, but in the long-term bear trend, okay. Then comes the stochastic RSI. Finally, now there is a change in the stochastic RSI. The K channel is less than the D channel. This indicates that now the stochastic RSI is bearish. It is bearish, right? Now, so until last week, okay, this is the last week, okay, last to last week, okay, the stochastic RSI was supporting the MACD. That was the reason it was in the short-term bullish trend, and that is what I told you, that because these are supporting, this means that the short-term bullish trend is there, okay, and it is expected to remain there until the CPI data is out. Okay, now that the CPI data is out, the picture is clear. Stochastic RSI has changed. It's the trend, okay, from bulls to bears. Now the MACD and the stochastic RSI are in the different directions. Okay, this means that now any upward movement will be very, very limited. If it comes, then it will be very, very limited. Okay, and any upward movement can be seen as an opportunity to go bearish. Okay, so this is we will discuss this thing in very detail, okay, in the fifth point of the agenda, that is the probable movement of the SP500, okay, for the next week. So now stochastic RSI is bearish, means the S&P 500 is bearish through the stochastic RSI. Then comes the divergence. Divergence is normal, not a problem. Then comes the saturation. No, it is not yet saturated. Then comes the directional momentum. Yes, there is some directional momentum, okay, that is supporting this the bullish trend, okay, but now that is again fading out, okay. So now guys, what we have noticed is that the SP500 is bullish through the Bollinger Bands on the weekly chart, that the SP500 is bullish through the moving averages EMA on the weekly chart, that the SP500 is bearish through the Ichimoku cloud on the weekly chart, that the SP500 is directionally bullish through the MACD on the weekly chart, that the SP500 is now bearish, okay, on the weekly chart. So now we can see that there is a mix of, okay, of these are technical indicators. Last week it was holding, it was more bullish than bearish. This week it is neutral, it has entered into this the neutral, okay, this is the neutral zone, you can say. Now it is neither bullish nor bearish, means the SP500 on the weekly chart is neither bullish nor bearish. Technically, this is technical, okay. Now we will analyze, okay, this is the same thing on the daily chart, and then the daily chart is most likely going to clear this the trend in the, okay, in this stock market. But now what we know is that because of the closing of the weekly candle below, just by this the $1, okay, this is the miss, okay. So this was engineered. Again, remember, this was engineered by the market movers, that they willingly closed it just by $1 in order to create the confusion, right? That's it, nothing else. And they wanted all others to think that now the stock market is moving up, the S&P 500 is moving up, go and participate bullish. But that is not true. That is not true, right? And this is the same thing I've mentioned a lot of times in the updates, okay, in the last week, that no, do not fall into the trap. Anyways guys, if you have not yet subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want the daily updates, the daily analysis of the S&P 500, then you can click on the join button that is there just below the title of this video. Now guys, let's move on to the second point of the agenda of this SP500 technical analysis. And in the second point of the agenda, we will talk about the support and resistance levels for the SP500 for the next week. Now guys, we are here, and this is the second point of the agenda of this SP500 technical analysis, and this is the support and resistance levels for the SP500 in the coming week, okay. So now one thing that we have noticed is that as of now, either there will be, okay, a bearish movement or there will be a consolidation, okay, but there is no bullish, no short term or long term bullish as of now. based on whatever data we have and the analysis, etc. Okay, this means that as of now, okay, now the 4185, okay, it is there. However, as of now, a hit to 4185, okay, that itself is not, okay, not that possible. So then let's concentrate to 4150 and 4160. Okay, again, that is not that easy to hit. Okay, 415060. Okay, very strong. This is the resistance zone, and you have seen, okay, that it was here. Okay, again back one, okay, upward movement, then fall, then two, the, okay, upward movement, then the fall. Okay, so we have noticed that back to back it failed. Back to back it failed. Okay. So this is what we have noticed, and this means that 415060, very strong resistance, and any reversal, any bullish reversal. Okay, that's say as of now we are talking about the bearish or the consolidation. Bullish reversal cannot be seen in this the bearish trend, but it can be seen in this the consolidation. Okay, we will talk about this thing in the fifth point of the agenda. Okay, in very detail. But as of now, okay, so during consolidation, okay, if we try to move up for some reason, for any reason, XYZ, if the market manipulators, if they manipulate, okay, in that case, that there's the upward movement, it will be restricted to 415060. Okay, as of now, nothing beyond 415060, and or you can say that nothing beyond 4185. Okay, so this is all, okay, this is now not in the picture. So now, okay, thereafter we have this the strong, okay, next resistance, okay, from 4100 to 4110. Okay, so earlier it has acted as a very strong support, and on Thursday it closed below 4100. And in my final update on Thursday, I mentioned this thing to my YouTube community members that now if it closes below 4100 or 4095, in that case there will be more and more bearishness, and there the next we can see, okay, this the bearish movement, the downward movement, okay, this thing, and expected that, okay, and we can expect, okay, this is the gap down open, it was there, and then there was a fall. So people, so my community member, they have booked their profits here. Okay, anyways, so now this 4100 to 4110, okay, which was earlier a very strong support to the S&P 500, is now going to act as a strong resistance to the S&P 500. This means that if the SP500 want to move up for any reason, for XYZ reason, even for the manipulated reason, then also first it has to struggle here. First it has to breach this the zone of 4100, 4110, and then only it can move towards 415060, then again a struggle. This means that back to back very heavy resistances, right? That is why we are saying that as of now in the bull side, okay, we are not expecting, okay, this the bullish movement, either consolidation or bearish. Okay, these are two conditions. Okay, so why the consolidation? Okay, I will talk about, okay, this thing later. Anyways, now comes the support, because the 4065, okay, yesterday it was SP500 was able to hold and close above 4065. That this means that and earlier to SP500, okay, it found the support, okay, at or around 4065. This means that once again 4065 is going to give, you know, some kind of good support to the SP500. However, there is a catch, and the catch is that if on Tuesday, okay, based on that $1 that we have discussed, okay, in this the weekly chart in the first point of the agenda, this means that if, okay, if that condition is heavily applied, okay, and that will be applied, and that if the Asian market and the European market, if they follow this the $1 condition, in that case they will give a bearish movement, because there will be bearishness from the Asian markets and the American markets, Asian market and the European market on Monday and also Tuesday. Remember, Asian and the European markets open much earlier, okay, before this the open of the American market. So if this condition is applied, and if the bearishness is seen in the Asian and the European market, then the open is most likely will be below 4065. This means that the support that we have, or that we are seeing here, 4065, it will be gone. Okay, this means that now this is strong support. This means that the SP500 has lost its strong support. Okay, and this. Then the next is the next support comes here. Okay, this is the zone of 4035. What is this? This is the zone of 4035. Remember, the zone of 4035 is a very strong zone, and as we have seen earlier, okay, many times, that anything that goes beyond the zone of 4035, it was bullish. Means it was considered to be bullish, and anything that comes below the zone of 4035, it is considered bearish. But then the upward movement, and now we are, so now this the zone 4035, it has shifted, means the sentiments have shifted to 4100 and 4100. This means that now the zone of 4035, so the zone of 4035, it is from 4025 to 4045. This is the extended zone, 4025 to 4045, or the confined zone is from 4030 to 4040. Means plus minus 5 for the confined zone and plus minus 10 for the extended zone. And this, the zone must be respected. The zone of 4035, it must be respected. Means it is not that easy for the SP500 to breach the zone in a one go. Even if it breaches, then also it will give an intraday reversal, or the next day reversal, but there will be. So we will talk about this thing further in detail later. Then comes from the 4035, then there is a kind of vacuum to 3991. Again a good support historically. It's been a good support. Then we have the 3960 support, good support. Then we have 3937, again a very good support, and as well as a zone 3960. Then we have after 3937, then we have the 3900, 3000, from 3900 to 3937. This will act as a very good or very heavy, very strong support, because there comes the Ichimoku cloud. Ichimoku cloud will be able to handle the fall, whatever fall comes in the S&P 500, 3900 to 3937, it will be able to handle that fall. But this does not mean that the SP 500 will not be able to breach the 3900. No, because then we have the very strong support here at 3884. 3884. Then finally there comes the zone of 3840. So this the zone of 3840 means as of now in the next week SP 500 is not expected to breach the 3840, or not there's a zone itself. An intraday breach, that's not a problem, because any intraday breach means that it is going to again reverse and to respect the zone of 3840. First, it has to spend some time, like 1 day, 2 days, or 3 days, around or in the zone of 3840. Then only it will be permitted to move below the 3840. And then we have 3790. So earlier we have seen that the zone of 3840, we have seen there's a lot of struggle, kind of consolidation there, and that consolidation was up to the 3790. So as of now, first the SP500 has to spend 1, 2, 3 or 4 days here, in this particular zone. Then only it will be allowed, then only it will be permitted to move below towards what? Towards 3500 or 3000. So these are the support and resistance levels. We will talk about this is the movement in the fifth point of the agenda. Now guys, once again, if you have not yet subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want the daily updates, the daily analysis of the SP500, then you can click on the join button that is there just below the title of the video. Now guys, we are going to talk about the most important part of the agenda. That is the third point of the agenda. And here we are going to talk about the CPI data. We are going to analyze the CPI data technically. And I'm going to tell you that now what will be the next, or what kind of CPI data we can expect this the next month technically, and how that is going to impact the entire stock market, and why the CPI data and some other data, NABH data, retail sales, etc. We are going to cover all of this the data, and then I will tell you that how this thing is going to work and why we are saying that no more short or long term bullish, rather either bearish or consolidation. These two things. So this is a very important part, and again this thing is going to impact the next and again this thing is going to make a very heavy impact on the next press conference of the Fed chairman. So we will see this thing, and guys, you must remember that the stock market it considers or it takes everything into account very well in advance. It will not wait. It will not wait for the event to happen. Okay, so once again, if you want these the daily updates, the daily analysis, and there is one more thing. Okay, this is there the opportunities. Okay, see, I posted this a trade setup. Okay, I've given this the trade setup to my YouTube community members. Then I have given these the potential opportunities, okay, in the stocks, that this is how, okay, these are the potential stocks, this is how you can trade, okay, and it worked, okay, very well, very well. Okay, then again yesterday also, okay, I have given these the 5 opportunities to my YouTube community members, that this is that these are the stocks, okay, that you can look for. So I'm giving these the daily updates, the daily analysis, as well as these the opportunities. Okay, so at least once in a week or twice in a week, okay, I will be giving these the opportunities. Okay, and sometimes, okay, I'll also be including these the trade setup. So now there is a change, okay, in this the tier system. So in order to join my YouTube community, either you can click on this the join button that is there just below the title of this video, or you can visit my channel page and you can click on this the join button that is there. Okay, this is the join button. So now once you click on this the join button, then you will notice that we have these the 3 options. Okay, the first option, all midweek updates. So this option will be discontinued from March 1st, 2023, which is why I request to all of my YouTube community members to upgrade to either of these the 2 options, daily S&P 500 updates or the updates and opportunities. Okay, and for those who want to join my YouTube community in order to get the daily updates, the daily analysis of the S&P 500 and also the opportunities, then you can subscribe either to the daily S&P 500 updates or the updates and opportunities. In this, the daily S&P 500 updates, you will get the daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything. Now, this the next level is updates and opportunities. Means you will get the daily S&P 500 updates from Monday through Friday, each and everything, and the movement, probable movement, and everything. Now, here the additional part is the opportunities. You will get the opportunities. So I will give these the opportunity at least once or twice in a week. Okay, so I will tell you that see, these are the stocks or these are the indices and this is what is happening in this stock, okay, or in this index. This is the target price and there is a potential like reversal, or it is going to move up, it is going to come down, or it is in the consolidation. And other than that, okay, sometimes I will also give you, okay, these are trade setups, right? So there will be these the opportunities for you, many opportunities. So that is the part of updates and opportunities. So if you are looking for the daily S&P 500 updates as well as the opportunities, then you can subscribe to or you can upgrade to the updates and opportunities. However, if you want only the daily S&P 500 updates from Monday through Friday, but not the opportunities, in that case you can opt for or you can upgrade to daily S&P 500 updates. And if you see that a lot of people here, they have joined my YouTube community for last many months and they are getting these the updates, the daily updates of the S&P 500 from Monday through Friday, each and everything, and also these the opportunities. And guys, last but not least, that once you have joined my YouTube community, then you need to visit my channel, and on this the channel page you will see this the community tab. You need to click on this the community tab and you will find all of the updates here, right? And guys, if you are using the YouTube app, then you will get the notifications from the YouTube whenever I post these the updates, okay, on this the daily basis. Now guys, we are going to discuss the third point of the agenda of this SP500 technical analysis. And the third point is the CPI inflation data and the impact of the inflation on the stock market. And not just on the US stock market, but the overall global market, right? So inflation, first of all, the number, the actual number. If you look into the number, then what you are going to see is that this time it was 6.4. It was 6.4, right? And the previous one, it was 6.5. So there was a marginal decline. If you notice that before 6.5, it was 7.1. So that was a considerable decline in the inflation. And before 7.1, it was 7.7, and then it was 8.2. So earlier we have seen that there were the considerable declines in the inflation, but now particularly from 6.5 to 6.4. So this is the least decline that we have seen from the top of from the high of 9.1. So what it indicates? It simply indicates that the inflation is holding. Inflation is holding. Simple. Okay. Now, now let's do this the technical analysis of the inflation quickly. Okay, and then the picture will be more clear. If you look into this, the chart of inflation, okay, the inflation, it has closed in between these the moving averages, okay, but there is no crossover in the moving averages. This means that the inflation is neutral through the moving averages, that is EMA. Then comes the Bollinger Band. Now that this is the median of the Bollinger Band, this is the lower band of the Bollinger Band. So inflation is in between the lower band and the median of the Bollinger Band. This means that the inflation is bearish through the Bollinger Bands. It is still trading above the Ichimoku cloud. This means that the inflation is still bullish through the Ichimoku cloud and is in the long-term bullish trend. Okay. Then comes the MACD. MACD is clearly bearish. However, both MACD and the signal both are positive. This means that the MACD is directionally bearish. However, the long-term trend is still bearish, still bullish. Then the stochastic RSI. Now, if you see the stochastic RSI, it is trading at absolute bottom. Okay. However, the number is 6.4, but still we are going to call it as the technical bottom. Absolute technical bottom. Okay, it doesn't matter that what the actual number is, but technically it has reached to the bottom. Okay, then all of the technical indicators are okay. Now technically what we have noticed is that overall inflation is holding. Okay, right? But the point of concern is this, the stochastic RSI, because the stochastic RSI has hit the absolute bottom, technical bottom. This means that a reversal is due. A reversal must be there, right? So this is what I mentioned earlier a few times also. Let's see. So stochastic RSI was trading at this bottom, and now it has hit the absolute bottom, and continuously for last 2 months we are seeing that it is trading at the absolute bottom. That is the reason. That is the only reason why we are seeing a hold in the inflation, and why we are expecting a bullish reversal in the inflation. Now that there was no bullish reversal, because the number was 6.4, okay, and the previous number was CPI data, it was 6.5. This means that a bullish reversal is due, and now whenever there will be a bullish reversal, most likely next month we can expect this bullish reversal to happen. And when there will be this bullish reversal, then this will be heavy, minimum, or you can expect like 10%, around 10%. Okay, this the bullish reversal in the inflation. So 10% will be very, very heavy. Okay, so 10% inflation means that recently Feds have raised the interest rates by 25 bps. Now they can go for 75 bps directly. They can skip the 50 bps. They can go for the 75 bps if this kind of situation is seen. Now comes the second part, the impact of the CPI data on this stock market, US stock market, and the overall the global stock market. So because the Feds will go aggressive or very aggressive. This means that the overall stock market must come down in the similar manner. Means earlier it was 3,500. Okay, so this time we can see the breach of 3,500 and towards 3,000. Okay, means in order to curb down the inflation, Feds must go aggressive. Their aggressiveness will then push the economy into the recession, and this is exactly what is happening in 1977, 1980, 1981, when the Feds compelled the economy, when the Feds pushed the economy into the recession in order to bring down the inflation. Okay, so that was the reason, and that was the only solution at that time, and looks like that is the only solution this time also, right? So inflation and this thing, right? And this is the impact. Means in terms of the S&P 500, S&P 500 is currently trading at 4079. Okay, so we can expect like 3,500. Okay, 3,500, definitely it will be in the picture. Okay, this means that 12%. So S&P 500 can lose like 12%. Okay, then comes the 3,000 in the picture. So this means like 20 to 23%. Okay, a decline in the S&P 500. Okay, now it depends on how aggressive and how soon they go aggressive, the Feds. Okay, and accordingly there will be that heavy decline in the overall stock market. Okay, So now the retail sales and the NAHB, it is NAHB, okay, home builders index. So now the retail sales, okay, we have seen that, see, it was all because of the 3 times NFP data, okay, 3 times NFP data. So now the retail sales, okay, retail sales is saying that now the people are buying more and more. Okay, it is clear that people are buying more and more, right? Secondly, the home builders index is saying that now there are the positive sentiments, okay, in the real estate, and that people are showing their interest to buy the properties, okay, and that is the reason, okay, the home builder index, okay, it has further increased, that now people are showing interest, or people are buying the properties. Okay, means overall, okay, these two data says that people are spending the money. People have the money and people are spending the money. Simple, very simple. Okay, now because people have the money, people are spending the money, this means that they will pay whatever the producers, whatever these the manufacturers, whatever they are asking for. Okay, if they ask these people to pay like $10 for something, okay, that usually cost like $7, then also the people will pay. Okay, now because they are buying, okay, they have the money, this is actually pushing the inflation up. This is actually helping the inflation to hold. Now it is in line with the technicals. When I say technicals, it is in line with the stochastic RSI, that the stochastic RSI has hit the absolute bottom 2 consecutive months. Now we must be very careful with this, the inflation next month, because most likely or highly likely we are going to see a reversal. Okay, and that reversal will result somewhere around 10%. Okay, this reversal in the means a bullish reversal, okay, in this inflation 10% approximately. Okay, now there is, one more, historically we have seen that inflation has holded, okay, for some time, like 2 months, 2 to 3 months, okay, 2 or 3 months, okay, continuously at the absolute bottoms. Okay, but again the thing is that if it gives a reversal in the next month, then that will be around 10%, okay, or 8% to 12%, you can say, okay, on an average. But if it doesn't give any reversal, rather it says that yes, the inflation is still holding, but there is no reversal. In that case, what will happen? In that case, in the month of April, the inflation will be having the potential to give a bullish reversal, or to give a bullish reversal by 15% or more than 15%. Okay, and this will be so heavy and so, or like extremely heavy, and that will force, or that will compel the Feds to go for like means then the Feds can even think of like 100 bps. Okay, that was not there in the picture, and we have not seen in decades. Okay, many decades, right? So this is all about, okay, this is the technicals and this is the inflation. So for now, clearly inflation is rising, and now in the upcoming, okay, events, the Fed event, okay, this the press conference of the Federal Reserve Chairman, okay, whatever, we can expect that the tone of the Federal Reserve Chairman will be hawkish. That because we have recently noticed that the Fed chairman has changed his tone from positive to negative within 5 days. Within 5 days, when this the 3x NFP data was published, that people are getting more jobs, means people have the money to spend, and they are spending. That was further confirmed by the retail sales. Okay, this is the data, and then the NAHB data, whatever data is coming up, or whatever data is okay, it is coming out. It is clearly saying that yes, people are getting the jobs, people have the money, and they are spending, and that is going to keep the inflation 3, 4, or 5 times higher than the expected levels, and that will then force, or that will compel the Feds to take extraordinary measures. This may, and yes guys, and there is one more thing again, no relief in the year 2023, no relief. This means that no bullish trend. Clear? Closed. Okay, so I also want to discuss the PPI data to give you more clarity. So this is the PPI data, and what is this, the PPI? Okay, see, we have the CPI and we have the PPI. Okay, so these are the two important data. Okay, PPI is producer price index. So this was my this is the update on February 16th. Okay, just after the pre-market update to my YouTube community members. So first of all, what is the PPI? PPI means the producer price index. Okay, this means the price paid not directly by the customers. Okay, like you and me, but it is paid by the third parties like insurance companies or employers, okay, or whosoever is the third party, right? And what is CPI? What is CPI? CPI means the price paid by the consumer himself or herself. Means whatever price we are paying directly, whatever we are buying and we are paying directly, that is the CPI. What is PPI? PPI is the producer price index. Means a third party is paying on our behalf, for example, insurance company. Okay. Now that so what has happened is that the PPI, okay, so it rose to 0.7%. Okay, and what was the previous PPI? Okay, last month it was minus 0.2%. So there was a heavy increase from negative to positive, from minus 0.2% to 0.7%, right? So this simply means that now the third parties, they are paying more on our behalf. This was the point, that what will be the impact of this PPI on the stock market? Because now the PPI will the PPI will forcing the third parties to pay more on your behalf. For example, insurance company is paying more on your behalf. Okay, this means that now these companies or the third parties are going to charge more. Yes. Okay, this is the point, that because the third parties, they are paying more to someone, okay, on your behalf. This means that now they are going to charge more from you. Earlier you were paying an insurance premium of, for example, $1,000. Okay, now the same insurance company will ask you to pay $1,200. Okay, what it means? This simply means that now the inflation is going to move up, because people have to pay the price. This means that the inflation that was supposed to cool down is not actually coming down, rather it is holding, or it is going to move up. Means the inflation will increase, and this means that the stock market will come down. And that was exactly there. That now, because they are going to charge more, this means the inflation will move up. Because the inflation will rise, this means Fed chairman will be extremely disappointed that he celebrated too early and gave the market a reason to celebrate because of the hopes he has given to the market. This means that now the Federal Reserve will go much more aggressive. This means that now the chances of going bullish are thin, okay, or seeing that the stock market is moving up, okay, that means that is thin. This also means that 415060 is the lower high. Okay, 415060 is the lower high. And if you notice, that was what? That was February 16th, right? This means anything beyond 415060 is a trap. And this also means that now you can short, okay, anywhere around 415060, means you can go bearish. Feel free to go bearish. Okay, that day I mentioned that now the entire stock market is 95% bearish, just a little confirmation from MACD, and then we'll be like 100% bearish towards 3500. Okay, so this was the update to my YouTube community members on that day. So guys, now we have multiple reasons: CPI, PPI, retail sales, NAHB, and so on. Okay, so all of this, the data, the economic data is clearly saying that the inflation is holding or is going to move up. Simple. Okay, no rocket science. So guys, once again, if you are not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want, or if you are looking for these, the daily updates, the daily analysis of the S&P 500, and also these the opportunities in this the US stock market, then you can join my YouTube community. And for that, you can click on this, the join button that is there just below the title of the video, or you can simply visit my YouTube channel. The link is below in the description, and you can click on this, the join button, in order to join my YouTube community. Now guys, let's move on to the fourth point of the agenda of this S&P 500 technical analysis. And the fourth point is what? The fourth point is the SP500 technical analysis on the daily chart. Okay, it is the daily chart. Remember, the first point was the weekly chart. We have discussed the weekly chart, and we have seen, okay, that the $1, okay, this thing, that how the market manipulators, okay, they have closed the S&P 500 just 1 point, just 1 point, okay, below this there's a strong support, right? So this was there. Now let's see, okay, how the S&P 500 is doing on this the daily chart. Okay, what the technicals are saying on this the daily chart, and whether SP 500 is going to hold or whether the SP 500 is going to come down. Okay, so guys, now we are here, and this is the daily chart of the S&P 500. Let me write it down. Daily chart, day as in daily. Okay, daily chart means that one candle represents 1 day, not 1 hour or 1 week. One candle means one day. Okay. Now, so technical analysis, but first comes this the candle itself. Okay, when you look into this the candle, okay, this looks like a bullish dozy. What? A bullish dozy. This bullish dozy indicates that yes, indeed SP500 came down heavily. Okay, it tried to hold and then it gave a reversal. But yes, it gave a reversal, an intraday reversal, and it closed okay almost around the open, almost around the open. Okay, this indicates or this bring up like 5 to 10%, 5 to 10% relief to the bulls. Okay. So what kind of relief? So it simply says that on Tuesday, okay, rather than seeing okay a heavy gap down, okay, we can also expect a hold. Okay, sorry, not a hold, but we can expect a flat open. We can expect a flat open, but again, chances will be like 5 to 10%. Okay, not heavy because the open, the open and the closing of this candle were below the closing of the previous candle. Okay, that is why the chances are 5 to 10% and not 50-60%. Okay, so this is the only meaning of this candle. Okay, then that it has the potential to give a flat open. Okay, a little up or down. Okay, that's fine, but a flat open, right? So this is with this the candle. Now let's look into the technical indicators. What the technicals are saying on this the daily chart. Okay, now there is a change in the technicals. So first comes this the Bollinger Bands. This is the median of the Bollinger Band. This is the lower band of the Bollinger Band. Because the SP500 has closed in between the lower band and the median of the Bollinger Band, this means that the SP500 is bearish. Yes, this time it is bearish. Okay, after many days. Okay, after how many days? I guess. Okay, these. Yep. So after many days, okay, finally it is bearish through the Bollinger Bands. Okay, SP500 is bearish through the Bollinger Bands. Then comes the next technical indicator, and that is the moving averages, EMA. Okay, exponential moving averages. If you notice that there is still no crossover in the moving averages. Okay, and secondly, the SP500 has closed inside the moving averages. What it indicates? This simply indicates that the SP500 is neutral through the moving averages. Simply neutral, no bullish, no bearish, simply neutral. Now comes the Ichimoku cloud. Because the SP500 is still trading above the Ichimoku cloud, this means that the SP500 is bullish through the Ichimoku cloud, right? Now comes the next technical indicators, and yes, this is the MACD, and this is what all we were waiting for. And this is the same thing that I mentioned to my YouTube community members. That this means once again we can say that the stock market or the SP500 is 95% bearish, and just a little confirmation from MACD and will be 100% bearish towards 3,500. Okay, so now that confirmation, okay, it came through this the last candle. That now we can clearly see that now there is enough gap, okay, between the MACD and the signal. Okay, the MACD is now less than the signal. Okay, last week this was not the case. Last week, okay, it was just holding. So last week, okay, it gave an early indication, but that was not a confirmation. But now, okay, it is confirmed. So MACD, SP500 is clearly bearish through the MACD. However, MACD and signal both are positive on the daily chart. Okay, so we cannot say that on the daily chart, okay, because it is positive, so it is in the long-term bullish trend. No, it is not. It is not. Okay, so what it simply indicates that yes, because MACD and the signal both are positive. Okay, however, MACD is less than the signal. This means that the direction is clear. Direction is bearish. Okay, but because both are positive, this means that whenever the SP500 comes down, and as long as MACD and the signal both remains positive, okay, there will be some chances of seeing a reversal, a bullish reversal. However, this does not indicate that this bullish reversal will, okay, it will simply bring the SP500, okay, towards like 4,800, 5,000, 6,000. No, it will simply say that this bullish reversal, okay, it will be a little, okay, a short bullish reversal, a confined bullish reversal. That's it, nothing else. Now comes the stochastic RSI. This is what, okay, we all were waiting, okay, for in our YouTube community. That finally the stochastic RSI is bearish. It was already, okay, it was bearish, okay, on Thursday, but now on Friday, okay, further it was confirmed because the K channel is less than the D channel. K is less than the D. Secondly, K is not yet 0 and D is not yet 0. This means that yes, still there is enough room or plenty of room, okay, to come down, right? Because the MACD and the stochastic RSI both are now aligned in the same direction. This means that yes, now there will be more and more bearishness, okay. Then comes the divergence. Divergence is normal, saturation is not there, volatility is fine, directional momentum is supporting, directional momentum is okay, little, okay, it is little and supporting these the bulls, okay, but again that is not going to help the bulls anymore, okay. Anyways, so guys, what we have noticed on this the daily chart of the S&P 500 is that first of all, SP500 is clearly bearish through the Bollinger Bands. Secondly, SP500 is neutral through the moving averages. Third, SP500 is bullish through the Ichimoku cloud. Fourth, SP500 is bearish through the MACD. Fifth, SP500 is bearish through the stochastic RSI. Now you can clearly see yourself. There is only one bullish, 3 bearish, 1 neutral. This means that now the SP500 technically on the daily chart is like 70 to 80% bearish. 70 to 80% bearish. Okay, this is technically. But when we also analyze the data, the economic data, and when we consider that data, in that case, it is not 70 to 80% bearish, but it is actually 90 to 95% bearish. Now guys, once again, if you have not subscribed to this channel, then please subscribe to this channel and click on the bell notification icon. And if you want to join my YouTube community in order to get these the daily updates, then you can simply click on the join button that is there just below the title of this video. Or you can simply visit my YouTube channel page and you can click on the join button that is there. Now guys, let's move on to the fifth and the final point of the agenda. And this is the last point of the agenda of this SP500 technical analysis. And this is the last point of the agenda is the probable movement of the SP500 from February 21st, that is Tuesday, to February 24th, which is Friday. Now guys, we are here and this is the fifth point of the agenda of this SP500 technical analysis. And here we are going to talk about the probable movement of the SP500 in the next week, that how the SP500 is expected to move in the coming week. That is the week of February 21st, that is from February 21st Tuesday to February 24th Friday. So guys, the very first thing, okay, that we must consider, okay, these two things. Number one, the candle on the daily chart and the candle on the weekly chart. Now the candle on the weekly chart, okay, it has already indicated that because of that the $1 difference, it has closed below the Ichimoku cloud. And now there will be bearishness, a heavy bearishness. Okay, that is clear. One part. Second part, because there is a candle on the daily chart. Okay, it is a bullish doji. It's a bullish doji. Okay, what it indicates that it can help SP500 to give a flat open. Okay, or it can even help the SP500 to move up a little. Move up a little to what? Move up a little towards 4,100 to 4,110. Okay. So now bearishness through the weekly chart and a little support through the daily chart. This indicates that the next week, okay, we can expect a bearish candle, okay, no doubt bearish candle, okay, or any kind of candle, okay. But in that candle, what we can expect is that the high of the candle is not expected to be open of the candle, means open will not be the high of the candle. Okay, rather you can expect like you can expect, for example, something like this candle. Okay, if you see this is the heavy bearish candle, so this was the open. Okay, after open it moved up a bit and then it came down. Okay, so in our case, okay, most likely something like this. Okay, that we can see or we can expect that the SP500 is still trying to move up, but it failed and then it came down. Okay, so open is not expected to be the high, rather open will be high will be something else. Okay, and then we can expect So most likely, okay, if all goes well, in that case, this kind of candle. Okay, see, I'm not saying that this kind of heavy, like 1%, 2%. It may be so. Like we can see like a very very heavy candle that has given us 4% to 5%, decline. Okay, or we can simply see a candle, okay, like a dozy candle, okay, or any kind of candle. But this is most likely to happen. This is most likely means on the weekly chart. See, I'm talking about the weekly candle. Okay, a weekly candle. Okay, this kind of weekly candle, not daily, but this kind of weekly candle. Okay. So now there are the two more factors that we must consider. Okay, before we talk about the this SP500. The first factor that comes here is the Dow Jones. Okay, now in the Dow Jones, you can clearly see that the Dow is consolidating. Okay, it is simply consolidating. Okay, this is what we call as the consolidation, up down up down up down. Okay, it is neither coming down, okay, nor moving up. Okay, so it is simply consolidating. Yesterday also it was able to save itself, and it again came back into the consolidation. Until and unless there comes a breakout, okay, either side, okay, we cannot expect any good movement in the Dow Jones. Okay, so for now it is consolidating. Secondly, now there was a little change. Okay, so which is an early indication that the Dow Jones is expected to give, okay, a breakout. If you notice that there are two consecutive closings below these the moving averages, two consecutive closings back to back. Okay, Thursday and Friday. Okay, this was not seen, okay, earlier, okay, during this the consolidation. Rather earlier, okay, it was able to survive. Okay, there were no these are two consecutive, okay, these are bearish closings. Okay, secondly, at the same time, okay, at the same time, MACD is bearish and the stochastic RSI is bearish. Okay, see again, guys, we are talking about the Dow Jones. Okay, we are not we are not deeply investigating this Dow Jones, but we are talking about the Dow Jones just to understand, okay, that what can happen, that how it can impact the SP500. Okay, so this means that now the Dow has better chances, okay, or much or more chances to see a bearish breakout. Okay, because it was the Dow Jones that has helped the SP500 to hold. That is why the SP500, okay, that is why SP500 it tried to came down, but it again moved up and then hold and hold. Okay, the same thing we have noticed here, okay, in the Nasdaq. Okay, Nasdaq, okay, it wanted to come down, but then again a hold. This was all because the Dow Jones was responsible to give that hold to the SP500 and to the Nasdaq. Okay, now when the Dow Jones, okay, it comes out of this the consolidation and it gives a bearish breakout, then that breakout or that heavy movement will be felt across the US stock market, all of the indices, mostly the stocks, and not just the US stock market, but in the global stock markets. Okay, a heavy bearish movement, a very heavy bearish movement. Okay, so this is the case with this the Dow Jones. But again, we need to see, okay, what happens on Tuesday and Wednesday, and when exactly, okay, it is going to give the breakout. So if you are my YouTube community member, okay, then I will tell you that exactly, okay, when we are expecting the breakout and its impact. Okay, in terms of the percentage decline in the SP500 and this the Nasdaq, etc. Okay, now comes the Nasdaq. So Nasdaq, okay, we have seen, okay, that Nasdaq has given, some unusual movement. Okay, Nasdaq has the history, okay, of giving these the unusual movement. Now, but if as of now, okay, if you look into this Nasdaq, the technicals of the Nasdaq, okay, again, almost, okay, means it is neutral. Nasdaq is neither bearish, okay, nor bullish, but it's neutral. However, now the MACD and the stochastic RSI are again realigning themselves in the bearish direction. Okay, means again bearishness here, and then its impact here. That now there are only two directions. Either it will go bearish, okay, the entire stock market. Okay, this is the SP500 and the Dow Jones and the Nasdaq. Okay, either it will go bearish or it will move into the consolidation. Okay, or it will simply consolidate. Simple. So these are the only two options that are there for this the entire stock market. Okay, including the SP500. So this means that there is no bullish. Okay, bullish is now out of the picture. Means this okay, and what it means? It means that any reversal or any bullish reversal, any good reversal can be seen as an opportunity to go bearish, means short. Okay, these two things are clear. So let us first talk about the consolidation. Okay, so consolidation comes into the picture if you see that during the consolidation, what is going to happen? During the consolidation, the SP500 will oscillate. See, what is consolidate or what is consolidation? Consolidation means oscillation. Okay, oscillation, up, down, up, down, up, down, up, down. Okay, oscillation. Okay, that the particular stock or an index or a commodity or crypto, whatever it is, okay, it simply oscillates between two levels. That is the consolidation. That's it. Okay. So this means that for the SP500, the range of the consolidation will be from 4060 or 65, you can say. Okay, from here to the 4150 to 60. Okay, 100 points range. This will be the consolidation zone for the SP500. This means that when it comes down, okay, to 4065, then it will see a reversal. Then it will move up towards what? Towards this level. Then it will hit, okay, this is the resistance, then it will come down. Hit, okay, up, down, up, down. Okay, this is the consolidation. Now, consolidation is the best time to make money. Okay, because you know that when it comes down, you buy. So that when it moves up, okay, you can sell. And when it moves up and it hits here, then you sell and then you further, okay, take this a short position, use, and then you short sell, and then when it comes down, then you buy, you close your trade, then you again buy. Okay, so during this up down, you make money, right? And if you're trading in the options, then you can use the spread, okay, the strategies, right? Anyways, so this is the consolidation. Okay, now the consolidation is okay, it is clear. See, one more thing, that during the consolidation, SP500, okay, or any stock or any index or anything is not under any obligation to respect the technicals. This means that the technicals will say bearish, go bearish, but you will see that the particular, okay, stock or the index, it is still holding, it is not coming down, okay, or means it is not bearish. Then you will see that the technicals will say that it must go bullish, but again you will see that you will say that no, it is not moving up, rather it is coming down. Okay, so during the consolidation phase, that stock index or that commodity or crypto is under no obligation to follow the technicals in any manner. And one more thing, that the consolidation phase, okay, particularly, okay, if we talk about the SP500 or an index, then it can last up to a month. Means the entire stock market, means the index, for example, SP500, it can remain in the consolidation for around 1 month. Okay, so historically we have seen, okay, that this is normal, 1 month, 20 days or so, okay, that is normal. Okay, but beyond that 20 days or 1 month, so that is not possible. Okay, because in that case, then it will be forced, it will be compelled to give a breakout. Okay, breakout means either it will come out this way or it will come out this way. Seeing the, okay, this is the current situation, it will come out this way. Most likely, highly likely, it will break out, okay, in this, okay, in this particular direction. If the market manipulators, if they want to build a trap, or if they want to trap these, okay, all of us, in that case, what they will do, that they will give a false breakout in the bullish direction. Then you will see that for 1 or 2 days, okay, there was this upward movement, and then the third day, a heavy bearish candle that has given up like 5 to 6% within a day. Okay, so this is what they have done earlier, and this is what they can do again. Okay, but now that you know that any good retrace is an opportunity to go bearish, this means that even if there comes a bullish breakout, short, go for this, the short selling, take short position, because eventually it is going to give up, and it is going to give up heavily, very, very heavily. Okay, so this was all about this, the consolidation, right? Now let's talk about this, the second part, okay, the bear movement. Okay, so bear movement, as of now, what we know? As of now, we know that first of all, if the SP500 has to move up, then it has to struggle, and it has to push hard. It has to push really hard, very hard, in order to breach this particular heavy resistance zone. And what is this zone? This zone is from 4,100 to 4,110. Okay, this is the zone. So first it has to breach, it has to close. Not just the breach, it's the closing that matters. And if you see that every day in my final update that I give to my YouTube community members 1 hour before the closing of the stock market, I always emphasize on the closing, that if the closing comes like this, if the closing comes like this, if the closing comes like this, then this will happen. If the closing comes like this, then that will happen. If the closing, it is all about the closing. Closing is what matters. That is why it is the closing, because of which I'm saying that the $1 difference on the weekly chart has changed the entire picture. So if there comes, so as of now, it is expected to struggle, because now the sentiments are super bearish. Everything is bearish. Okay, but because of the formation of this, the bullish dozy, okay, this means that yes, it can give this a flat open. Okay, a flat open. And if there comes any movement, okay, like if there comes any movement or any kind of this a gap up open, okay, surprisingly, okay, or if there comes any open, then, or if there comes any bullish movement, then that bullish movement is expected to be restricted to the zone 4,100 to 4,110. That's it. Okay, not beyond that. This means that if you see that it is moving up, it is struggling, go and short. Okay, think bearish. Okay, go and short, because eventually then it will give up and then it will come down, right? But if you see that somehow it is holding and it was able to breach, and now it is moving above 4,110, then yes, then that is the time when you should wait for the closing. Okay, if the closing comes above the 4,110, above this particular strong zone, then only for the rest of the days there will be some potential to see a movement towards this. Okay, 4,150 or 4,160, and this will then also confirm that the bearish movement, and then this will also confirm that the SP500 is consolidating. It is under consolidation. Simple. Okay, so this kind of movement. So if this was your question, that when to identify the consolidation, then this is the answer. If you see that for some reason it has breached, it has closed above the 4,110, this means that yes, it is consolidating. Anyways, we are talking about this is a second scenario. This is the bear movement. Okay, so it will struggle here and then it will give up. So when it will give up, okay, then it will come down. Now if it closes below 4,065, if it closes below 4,065, in that case what will happen? In that case, the next day, whatever will be the next day, okay, most likely it will be Wednesday. In that case, what will happen on Wednesday? It will further come down. Okay, and it can even give a gap down open, right? On Wednesday, it can even give a gap down open and then it will come down. Okay, now the question is that where exactly it is coming down? Okay, means what? Means where exactly it is heading to? First of all, okay, it will be heading to the zone of 4,035. This is a strong zone. Okay, so this zone will be able to give some support to the SP500. Whenever the SP500 comes down, it will be able to give some support, like for 4 hours, for 2 hours, for 1 day or so. Okay, or like for 2 days. That's it. Okay, but as of now, we have these the heavy or very heavy, strong bearish sentiments. This means that this zone will be able to give a support for like 4 hours or a day. That's it. Okay, not more than that. Okay. Then what will happen? It will breach and it will come down. Now it will come down towards what? Now it will come down towards 3990. Historically, 3990, because of this 200-day EMA, it has given a very good support, very strong support to the SP500. This time again, we can expect some support 4 hour 1 day. Okay, on this the 3991. Okay. But because see, as soon as it closes below 4035, what is 4035? 4035 historically, okay, it was a very strong zone. As soon as it closes below 4035, then there will be then this the path, okay, then this the roadblock it will be clear. Okay, to what? As soon as it closes below 4035, then it will be clear that now it is coming down towards 3937. It has the potential to come down towards 39, not just 3937, but to 3900. Why? Okay, the reason is the Ichimoku cloud. Because as soon as it clears the zone of 4035, then it has the reasons, valid reasons, strong reasons to come and hit the Ichimoku cloud. It will be the Ichimoku cloud itself that will give them the support to the SP500. Okay, because as soon as it breaches the other side of the Ichimoku cloud, two consecutive closings. Remember, we are on the daily chart, okay, and we always rely on the two consecutive closings. So as soon as there comes two consecutive closing, then the SP500 will then move towards 3,500. Means then now this path is clear, okay, and this so there will be this journey towards 3,500. So all it need to do is to close below this the Ichimoku cloud two consecutive closings. Okay, so next week, okay, it will be 3,900. Means two consecutive closings below 3,900. Two consecutive closings below 3,900. Okay, and then it's done. Then it will resume its journey towards 3,500. Okay, so it will come down, and then yes, now. Because there are very heavy bearish sentiment, so there are chances that it can further come down. Okay, because if we calculate, okay, this in terms of the percentage, okay, this the downward movement, then we can clearly see that around 7% it can within a week 7% decline. Yes, that is possible, fairly possible, because historically it has given 10% decline within a week. So 7% is fairly possible. That is why we also have then 3884. Okay, it will give some support. Now comes the final support to the SP500. Even in the worst case scenario, SP500 will be able to get the support, heavy support, in the zone of 3840, and not just in the zone of 3840, but because of this the earlier consolidation, okay, to 3790. So this very heavy, okay, 50 points zone, support zone, heavy support zone. Okay, it is going to act as a cushion for the SP500. Whenever the SP500, okay, it will come down, okay, it will find support. It will find support here from 3790 to 3840. Okay, this will be the zone. So next week, even in the worst case scenario, it is not expected to breach this heavy zone. Okay, intraday just a bit up down, that's not a possible, but again it will retrace and it will close itself, okay, inside this the zone, because it has to respect the zone. Okay, so next week, guys, this is what is there in this the picture. So do not think that the picture is going to end here, okay, at this Ichimoku cloud. Chances are that within 1 or 2 days we can see a heavy fall to this Ichimoku cloud. Then what will happen for the rest of the days? In that case, it will further come down, right? So this is what we call as, okay, this is the final support for the SP500. Okay, and so first support 4035 zone. Second support is the Ichimoku cloud. The third and the final support is this the 3840 to 3791. One more thing. Think bearish. Think bearish. Okay, if you see that intraday, okay, or like for a day or two, okay, it is reversing. Okay, in that case, do not go bullish. Do not go bullish. Rather, wait for it. Okay, wait for it to give the reversal. Once it gives the reversal, then you can short. Take the short position. And the only case you can think bullish will be if there comes a consolidation. If the SP500 moves into the consolidation, that will be the only case that you can buy here, and then you can sell here, and then again you can sell here, you can buy here, sell here, because in that case it will simply oscillate. Okay, and one more thing, guys, the consolidation zone, the zone of, okay, this the consolidation, okay, it can change, okay, by a few points. Okay, so that's not a big deal, it can change, right? So if there comes any change in this the consolidation zone, and if you are my YouTube community member, then I will tell you, okay, if that change is happening. First of all, I will tell you that whether it is actually trading in the consolidation or not. If it is, then if the zone is intact or not. Okay, and if there is any possible change. And if not, then the bearish movement, then we will talk about this, the bearish movement, intraday retraces, reversals, and then the same thing, and then I will tell you that every day, what is the possible range, of the movement of the SP500, as I give you like, almost every day that I tell you, this is the lower range, this is the upper range, SP500 will trade in between these two ranges, means in between these two levels, that's it, nothing else, and this is what happens, right? So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my channel and click on the bell notification icon. And guys, one more thing. And other than that, if you want the daily updates, the daily analysis of the SP500, and also, these opportunities. In that case, you can join my YouTube community. In order to join my YouTube community, you can click on the join button that is there just below the title of this video, or you can simply visit my YouTube channel page. The link is in the description, and then you can click on the join button. So guys, hit like if you have liked this video, and if you have any questions that you want to ask, then please feel free to ask your questions through the comment section, and I'll be happy to answer your questions. So guys, this was my S&P 500 technical analysis for the week of February 21st, 2023. That is from February 21st, Tuesday, to February 24th, Friday.